Fantastic. Alrighty, hi everyone, I'm America Josh and welcome to Navigating the Australian Property Market from the US, a free webinar for Aussies, expats, especially in the US. Today we've got three experts in various fields when it comes to investing and buying property. Stephen Lee from Odin Mortgage, Pal Lam from Odin Tax, and Sky Hammer of Convergence Buyers Agents. Hello to you all. Thank you very much for joining me to start. I'm going to quickly run through how we're going to run tonight, and then we're going to jump right into the questions. We know that all of the people that have registered for today have submitted their own questions, so we'll be working our best to have a chat. All of the participants and all of the panelists today are going to jump in if they've got particular things they want to talk about. They are going to jump in with those recommendations. So it's going to be a way for us to constantly sort of hear from each of the different involved parties, and we'll make sure that we include everything from the start of the process when you're actually setting up your finances to the actual buying of the places, and then the tax implications. The tax implications is one of the areas that we always have a lot of questions coming in about, and this time we're really trying to make sure that we can round out that circle and fill in some more information. So this webinar is meant to provide a surface level information of how to buy and invest in property in Australia from the US. So it's not going to necessarily answer all of your direct questions. It is meant to be general advice and not specific advice. The advice that all three of our panelists are going to recommend at some point is that you should seek professional advice individually if you do actually want to start down this process, which is something that we're going to talk about. But this should give you a good intro. It should give you a good understanding of how this whole process works, because it can be daunting buying a place even if you're in Australia, let alone if you're not in Australia and you want to buy something. So the only other bit of housekeeping is that there is a Q&A window that you can find down the bottom of the screen. I see that people are already asking questions, which is great. I'm going to keep an eye on that. If you do have questions, make sure you add them. You can add comments for me as well, and I will ask the panelists as we go. So thank you again, all three of you, for jumping on. Stephen Lee from Odin Mortgage. I want to start with you because I feel like you've got the first part of the process. Do you want to give us a quick intro into, who is Odin Mortgage, who is Stephen Lee, and where do people start in this process?
Yeah, absolutely. Josh, thanks for having us. So hey everyone, Stephen from Odin Mortgage and Tax. So we've got our mortgage and tax arm where my colleague Pao is here with me. So I look after the mortgage side of our business, where Odin, we help Australian expats and overseas investors looking to buy properties back in Australia, or review their existing mortgages and a tax position for an optimization opportunity. So I personally have been in this Australian banking and mortgage industry just over a decade, and joined Odin late last year with a mission to better serve the expat community. So I'm from Sydney, but flew into Singapore to set up the office here about 6 months ago. So I'm a newbie expat myself. So definitely have learning a lot of early lessons as a newbie expat. And I understand the expats, the Australians in the States, now the demand in the Australian properties are coming up. So I'm hoping to give a bit of rundown on how to navigate through your borrowing options, as well as some tips and considerations when you're looking to buy a property or applying for a mortgage.
I love it. And so some of you would have seen Stephen pulling beers at the Big Aussie Barbecue. So yeah, some of you may be familiar with his work. Sky Hammer from Convergence. Tell us, so that's the intro for the mortgage side of things. That's the framework. Can you tell us a bit about Convergence and what you do and sort of your background in this process?
Perfect. Yeah, thanks, Josh. Hi, everyone. Sky Hammer from Convergence Buyers Agents. As Josh mentioned, we are a buyers agency that helps Australian expats buy property back in Australia, both for an investment, but also for their potential future houses to live in the future. We're a boutique agency. We're still relatively small, and most of our team, not all, but most of our team have actually been expats in the past as well. So again, understand those kind of unique situations that you might find yourself in.
I love it. Sky, I'm going to ask one question straight out the gate. How's the market looking right now? Good, bad, ugly?
A bit of everything. So there's obviously markets within markets in Australia. I think we'll touch on those markets a bit later on, including markets we think are undervalued, I think are really good at the moment. But places like Sydney and Melbourne are in this kind of holding pattern. They're not really sure which way they want to go. Melbourne's pulled back quite a bit. However, there's been some really good markets like Perth and also regional Queensland, where we've seen double-digit or close to 30% growth over the last 12 months. So really different across Australia, but we can chat about that a bit later on in a bit
I
more
love it.
depth.
This is like a teaser. This will keep everyone hooked right until the very end. Pal Lam from Odin Tax. I know it's Odin Mortgage and Tax, but I'm gonna break you guys up into Odin Mortgage and Odin Tax to keep things easy. But Pal Lam, thank you very much for joining us, because I know that we have whenever we talk about property, and we always put a flag up the top and we say, tax is super complicated. So we appreciate you taking the time today. I do want to flag for everyone that, and correct me if I'm wrong, Pal, but your expertise is really around the Australian tax implications. So we want to make sure that people understand there are going to be US tax implications and Australian tax implications. Today, we're talking about the Australian tax implications. That's what we're going to focus on. So do you want to give a bit of an intro about yourself, Pal, and Odin Tax, and what people are sort of coming to you guys for? And then, a sort of surface level look at tax. Let's keep it exciting.
Yeah, sure. Thanks, Josh. So let me quickly just give a bit of my background as well. I work with Stephen. He's managing the mortgage department at Odin, and I run the tax team here. I'm a bit longer than Stephen being an expat. I've been back from Sydney for 10 years, back to Hong Kong. So since then, I have been helping Australian expats living overseas from all around the world to handle their tax in Australia. Again, we are only focusing in the Australian market. So helping expats for the last decade doing their tax as a non-resident for tax purpose. So that's where our specialties are at Odin. And the reason why we want to make it simple, easy is it always comes with the tax questions. And if you're thinking of buying property, the next question or the thing you should know beforehand is what is the tax may look like. And this is the main reason why we want to combine into one house services that we can provide from beginning to the end. When you're selling, what sort of benefit cost are you looking at?
Yeah, cool. So it really does fold into sort of the whole process, right? It's not something you can think about as a separate part of it. It really has to be from the outset. So you get people coming to you not only doing sort of around housing, but just tax in general. Is that right? If you're an expat tax, that's sort of the broad brush.
Yeah, anything that related back in Australia, that's where we assist. But for most expats, they would have the properties which they start to collect rents in Australia, and that's the main reason why they still need to submit a return in Australia.
Got it. Because it is this having some sort of nexus, some sort of activity in Australia that triggers the need for joining this webinar tonight. Awesome. Okay, Stephen, I want to start because I feel like as much as we just established that tax is incredibly important to the whole process, we're going to keep arcing back and keep having tax wind into all of these things. But I want to start with the broad strokes of, if I want to get a mortgage in Australia for an Australian property and I'm living in the US, what's different? What's unique? What is the process when somebody comes to you?
Yeah, sure. So I guess just to start off with, the general sort of process is somewhat similar, whether you're borrowing as an expat or as an onshore borrower in Australia. It's more of a like knowing the product offerings and the eligibility criteria, especially when you're earning the foreign income that is not in the Australian dollar currency. And that's where Odin comes in as an expert. So we work with like 20 plus Australian banks and lenders across major banks, regional banks, and even some non-bank lenders who have designated products for expats and overseas investors. And we're the expert in the niche in the foreign income policy. So I guess knowing your numbers will be very important. Because we actually had a lot of expat clients, especially in the States, who had a frustrating experience by talking to their own banks in Australia, and not many, with no disrespect, not many onshore sort of bankers or brokers have that day-to-day experience dealing with the foreign currency income. So a lot of our clients actually had a past sort of a bit of a bad taste from their initial engagement. So I guess the first thing that you should do if you're thinking about buying a property is to talk to us and know your number. There's no paperwork or documents required, and you don't need to talk to like 5 different banks individually. You can use this as a platform to access 20 plus lender offerings in a single conversation. But just to give you some context, I've just got a slide up. So let me just quickly bring it up and I'll share on some of the considerations. Can you see my slide?
Yep.
Yeah, so when buying a property, there are two parts to the equation. So one is the deposit, which is based on your savings or liquid asset position, and the second part is the loan, which is driven by your borrowing power. So one consideration as an expat is that unlike say first-time buyers in Australia or those who are living and working in Australia looking to buy their immediate family home, who could actually borrow up to 90% or even 95%. Generally, expats are required to have minimum deposit of 20% of the purchase value, plus the stamp duty and the legal cost. However, we do have some lenders and banks who have started offering more than 80% lending on an exception basis. So, which sort of indicates that now lenders are becoming a bit more flexible in this high interest rate environment. And the other side, when it comes to your borrowing power, the equation is quite different as if you're looking to borrow in Australia. So generally, the earning power in the States or will be higher than Australian on average, which is a positive impact to your borrowing power. And then also typically, so this slide is for Singapore, but even for States, the income tax rate is generally slightly lower than the Australian income tax rate, which are all positive impacts. However, Australian lenders do apply restrictions to foreign income. So let's say you earn $100, most banks and lenders would actually discount that by 20 to 30%, which means that out of your $100, only $70 or $80 will be taken into account for your loan assessment, which negatively impacts your borrowing power. And then also additional sort of high sort of costs, living expense items like school fees and rent in the States, those would of course cause a negative impact to the borrowing power. So again, these are some of the levers, but it's very important for you to have just a complimentary chat with experts like us, so you know your numbers and you can manage your expectation as you get ready and start looking for your dream home.
Yeah, so it's not only like it's not only a communication issue, sort of understanding how it is as an expat. There's actually sort of different rules. I think it's sort of understanding that it's actually different is important as sort of a baseline to understand that there are fundamental differences whether you're applying as someone a resident in Australia, whether you're a citizen or not, doesn't matter. If you are living abroad, earning money abroad, that can really have an impact.
Absolutely.
So Sky, from your angle, when it comes to somebody sort of starting off in this process, is there similar sort of restrictions, or is it more just sort of the fundamental, like the basics of actually getting out there and finding a property and being present that is more of the difficulty?
Yeah, so I guess for most expats, the issue is just they're not on the ground in Australia. So there's the obviously expecting the properties on their behalf part, but it's also just being in the same time zone. So being able to speak to agents and obviously work through that process of identifying and sourcing property. So that's obviously the biggest constraint we find with our expat clients. But yeah, outside of that, it's obviously the relationships you need to have to get, I guess, good off market deals or kind of buying below market value as well.
Yeah. So, and that is what you do. That is the reason that somebody engages you.
Yep.
You sort of become their advocate on the ground. That's right.
Yeah, that's correct. So for us, it's a full end-to-end buying process. It's the identification, sourcing, and negotiating a property. If it's going to be rented, it's getting in property managers, tradespeople, whoever else we need to kind of really shape that, fix up any maybe small issues with the property. But the main part as well that we do for our clients is actually the kind of strategy session we hold up front. So if it's for an investment, it's defining what your objectives are, not just for this property, but in say 5, 10, 20 years, and make sure that property is actually going to get you to where you want to get to. And if it's a future house, it's working through those really meticulous requirements of how many bedrooms, does it need a pool, what's the land size, north facing, all of that kind of stuff. So we spend a lot of time up front working through that. Yeah.
Okay. So for like Power, when we fold in to that, we've sort of got the processes involved. There's sort of boots on the ground. This guy, there's the process of establishing credit and having a line of actual availability of money with Stephen. When it comes to the tax, I know we were talking about how it is something you need to prioritize. How early should people be thinking? Is it something that they come to you really early in the piece and say, I want to one day buy a house. I need to start thinking about this years in advance? Or is it something like, how does that timeline work?
So let me share my screen. I'll just
Yeah,
quickly
please.
go through. So we jump in at the beginning, and this is the main reason, again, we established the mortgage and tax as a household services. We will come in at the beginning of the conversation along with the mortgage for you to help understanding what is the cost. Mainly are three things: cost of buying a property, what sort of income or what sort of money you need to have in order to purchase a property, and what are the costs involved to maintaining the property or to selling the property. So we come in from beginning and hold your hand until the end eventually when you sell the property. So there are a few considerations that we would discuss during our mortgage and tax meetings with our clients. We go through the stamp duty, whether you are being an Australian expat living overseas. Are you being penalized for just being living abroad from Australia? The quick answer, the quick answer is not. You'll be seen like a normal Australian living in Australia. You pay the normal stamp duty like anyone else in Australia, and other stuff like legal. And those are the other two things: FIRB and stamp duty surcharge. Those are only applied it to foreigner, purely foreigner without passport or without PR of Australia. But yes, generally for Aussies living abroad, the probably only thing you need to consider is just the stamp duty and legal fee, maybe a fee of like the other subsidy, report fees, etc. But one thing I want to focus maybe, I believe a lot of people will meet their loved one while in the US or any part of the world being an expat. So another consideration we'll take into account is if you are thinking of buying with your partner who might not be an Australian or PR, and this is important topics again that we come in from mortgage and tax to discuss what sort of options and what is planning you should go with to avoid the stamp duty surcharge, the additional fees of buying a property, and in the long run, when you're looking to sell the property, what sort of benefits. So this is how we structure. And then the next is really, once you settle your property, what is the steps to maintain the property? And we still have the negative gearing applies to expats living overseas. So that one doesn't take it away. The government didn't take it away from us, so we can still apply the losses that you might have accumulated on the property. And to the end, when you sell the property, when it comes to capital gains, we would then look at, all right, what sort of capital gains you need to pay. So we would do a projection during the whole process to let you know if you're buying this property, what is the cost, what is the running, and what is the end result when you are looking for if this is going to be an investment. What is the return on investment that you're going to expect on these properties? Assuming the property going to be performing as expected.
Okay, so it really is about, and I think this is something that Sky, pardon me, is you touch on as well, is this idea that it's important to think about not only sort of the what I want to buy, but also what it looks like in 10 years and what it looks like in 20 years. Do you want to sell it at some point? Is that right from you, Sky?
Yeah, that's correct. Like, there's obviously the upfront costs and tax considerations, but I guess generally speaking, it's the ones in the future that are going to be the most costly if you get wrong, which is why it's really good to have someone like Power upfront, because you really need to plan for that from the outset.
Yeah, cool. So Pat, do you want to extrapolate a little bit on, I know we got a lot of questions around the capital gains tax side of things. I think it's probably just a good time to jump right in because that is one sort of question that a lot of people asked about. So in terms of the differences between, someone, a citizen living in Australia and buying a place, and then someone that lives overseas, what are the fundamental differences for those two groups?
Yeah, so let me bring up another slide.
Please.
So this one is about eventually when you sell the properties, what to expect when it comes to capital gains calculations. So the main difference, and for most of our attendants or people who come to this event, I believe they are expats living overseas. So to me, the wording I will be using instead is tax non-resident of Australia from a tax perspective. So we living overseas as a non-resident for tax purpose, the rules are slightly different when it compared to people living in Australia in general. So when it comes to the calculation of capital gains tax, the rule of thumb is pretty much all expenses you pay on the property is deductible. So you can claim the stamp duty, the legal fee on purchasing and selling, agent fee or buy agent's fee, commissions, pretty much all the expenses you incur during this purchasing and selling process is deductible against the capital gains. So we just need to work out what the number that may look like. But it's worth noting that there are two things that slightly change for us as a non-resident for tax purpose, which is the 50% discount on capital gains tax. So generally, for people in Australia, they would be able to enjoy the 50% discount on CGT if they hold the property for more than 1 year. However, the rule had changed for us as a non-resident for tax purpose back in 2012 that the government had removed that benefit from us. So just be mindful that whatever you're making, the profit that you're making as a non-resident, it is subject to tax 100% at your marginal tax rate at the end in Australia. Another thing I want to bring into attention is when you sell your property in the future, and you'd be selling for more than $750,000, for example, there is another system or regime in place with the tax office in Australia that they want to take withholding, a 12.5 withholding of the sales proceed as settlement. They're going to see that one as your estimated capital gains. So unless you go back to them and do some work to reduce or vary the rates, otherwise you need to expect that some money will go to the tax office first. You can always claim it back eventually when you submit your tax return, or you can do a variation in advance. So these will be the main difference when it comes to the capital gains, what sort of expenses can be deducted. And another thing to add on is you might be at this point here accumulated tax losses from previous years. So this is related to negative gearing. So if you are making a loss on the property because of the mortgage and all the expenses you have on the property, you are likely to accumulate some sort of tax losses. And those tax losses can now be applied here to offset the capital gains. So eventually it would help you to reduce your tax when you sell the property in Australia.
Got it. And so does that, from that slide, does the 50%, I know we just had a question, does the 50% discount only applies to tax residents? So does that come back when you become tax resident? Like, how does that timeline work? If you are someone that, so I'm living overseas and I'm thinking about buying, if I move back, how does tax residency get tested, and how does someone sort of regain that 50%?
Yeah, so it will come back eventually when you return home for good, become a resident of Australia again. And it could be two scenarios. While one is you move back into the property, that becomes your main residence. If that's the case, you will be able to enjoy the main residence exemptions. So from that point onwards, when you move back to Australia and live into the property will become CGT free. But it's only from that point onwards. So what has happened in the past could not be changed. So, or you choose not to live it back into the property, you choose to rent somewhere else, keep the property as an investment, you will still enjoy the 50% discount. So it really depends on what the end result that you want to do with the properties.
Yeah. So once again, we've got to have a bit of a crystal ball and plan years in advance and kind of know what you want to be doing. But it all comes into play, and you might, so do you build out a few different pathways? So you sort of say this, if this, then that, that's sort of how you work with people right at before they even approach Stephen and start talking about mortgages?
Exactly. So I think first thing we always wanted to understand from our clients is, what are you trying to achieve? What is the goal that you're trying to do while planning for your future? So we could work out a few scenarios depending on if this is something you're going to live into, or this is just purely for investments. What sort of returns? If at the end of the day, it's looking at the numbers. What sort of numbers are we looking at? Would it make financial sense for you to invest in the properties? So yeah, our team for mortgage and tax would do the same thing to make sure, or so for some people, they are thinking of building a wealth in Australia, again, utilizing their time on a higher package overseas. So this is what we do to build a portfolio for our clients, either it's a home or for home plus investments portfolio back in Australia.
Okay. So Stephen, building that package, putting that all together, for some people, I imagine you've got some people that are saying, I want to build, I want to buy my sort of primary residence, I'm moving back and I want to do that. How does that differ from someone that might be investing? What are those differences from your perspective? If
Yeah, so whether you're looking to buy a future family home or whether you're looking to just build out your investment property portfolio, I guess from a mortgage perspective, it's somewhat straightforward. So while you're still living and working overseas, Australian banks would still consider yourself as an investor for the immediate sort of needs and purpose. So what that means is that the product offerings that are eligible for our expat community are generally sort of limited to investment home loans, which are typically like 0.2, 0.3% more expensive than the owner-occupied home loans. But that's fine because once you once you buy a property and let's say you rent it out for a couple of years and then you decide to move into the property if and when you return to Australia, that's where our concierge service comes in because we manage our clients' home loan accounts throughout the life cycle of the property, and we'll help our clients to convert their investment home loan into owner-occupied home loan, where our clients would realize the interest savings from the time or close to time when you actually move into the property.
Okay. So yeah, sort of comes into that planning again. So then in terms of leveraging properties one against each other, so that's one question that we got a lot of. So if you are going down this investment path, what are the implications that's different for someone who's living abroad from someone that, if you've been investing in Australia, for example, and you've had a few properties, you've moved abroad, what changes for you?
Yeah, so it comes down to the borrowing power and then also the equity positions that you may have. So accessing equity, so it's a very common strategy and smart strategy to access equity from your existing property to support funding your next purchase and then use that as a vehicle to grow your portfolio. It's a very common strategy, and I guess it's essentially treated as you're borrowing more against your existing property. So let's say your property is worth $1 million and your outstanding mortgage is $300,000. That means that there are $700,000 equity available. And that's where the concept of loan to value ratio or LVR comes in, that generally in Australia, Australian borrowers will be able to borrow 80% or plus. That means that you could actually increase your borrowing against the existing property to $800,000 or more. That means that $500,000 plus is available for you to draw down to support your next purchase, whether that's in a form of a deposit for your next purchase or buying your next investment outright without necessarily getting another mortgage. But the catch is that, and again, that's where I'm highlighting this point, that it's very important to know your numbers, especially when it comes to borrowing. Even though you may have a very generous equity available in your property, in Australia, that you need to have the sufficient borrowing capacity, which is driven by your income and expenses, to be able to borrow more against your existing property. So that's where the particular restrictions around the foreign income policy, and then also banks and lenders, their own limitations on expats and also particular countries. So it's very important for you to understand available product offerings to your circumstances and to your earning powers, and also pick and choose the lenders that may offer the lending that will suit your need. And one I guess myth that I want to break is that you don't need to get borrowing through a single lender. So unfortunately, the concept of loyalty or a strong relation with a particular bank, it doesn't really make a positive impact to your borrowing power. And where we help our clients is that leverage available lender options or product offerings in the market and pick and choose the right lenders, whether it's your first borrowing or second borrowing or third.
Okay, right. Good to know, because yeah, I imagine you hear that a lot from people. So for Sky, like when it comes to the sort of idea of investing, what changes for you? What changes for someone who might be looking at a primary residence, I know we sort of touched on this before, but compared to an investment, what sort of structurally, how does the conversation change? What should people be thinking about? What are the things that you sort of like to flag for those who might be starting this adventure?
Yeah, so good question, and one we probably get the most from our clients. And I think for expats, what we see the most is that when they're looking to purchase an investment property now, they also kind of want it to tick the potential house to live in the future box as well, which can obviously is a bit of a trade-off. So some people want to do both, and that's fine. And we can say, look, if you think you're going to move back to Melbourne in the future, we'll buy you the best possible investment in Melbourne right now. However, noting that we think maybe Brisbane or Perth offers a better actual investment potential. So it's really distinguishing that up front. Are we going purely investment? And if that's the case, then we can talk about a lot of different markets in Australia. Or if we're trying to do both, then we're kind of limited to one particular location. So that's usually the first question. From us, then it's identifying what that market is. So for us, that's when we do that strategy session, and we'll say, is capital growth what you're looking for? Are you looking to get equity quickly so you can buy a second, third, fourth property? And that really then identifies which markets we want to be buying in. It's a very data-driven buyers agency. We do spend a lot of money on data. So we're very good at identifying where those markets are going to be, where we get that short-term growth. So if that's a requirement, we'll go down that path. If it's for a place to live in the future, though, that's when it's very specific on what we're looking for in the property. So we work through that process there, kind of hand in hand. We do one or two lengthy sessions. We actually give our clients a bit of homework. So we'll actually send through here's 4 or 5 example properties. Tell me what you like, tell me what you don't like, just so we're very clear with what those requirements are before we go out and source those properties.
Okay. Pal, I was going to ask you if someone has one intention at one point, so they're looking at buying their primary residence, and then that sort of changes and things, but they're still living abroad. Does that change the situation from a tax perspective that they need to be, again, is this just sort of one of the pathways that you plan out with them?
Yeah. So again, having property in Australia doesn't really change about a residency. So
Yep.
if you are generally living in the US for good, then you again will remain as a non-resident for tax purpose. So buying a property, meaning you're just gonna have more income coming from Australia and submitting and letting ATO know about your situations. But it wouldn't. But obviously, there are some cases where we can discuss personally if anyone has that questions. But in general, that wouldn't change anything. So again, the wording I'll be using is non-resident for tax purpose, and the only thing it would matter is really about your citizenship when it comes to the cost of buying, the one that I mentioned. If you are an Australian, generally you won't be penalized for anything further. But if you are buying with a partner who's not Australian, then yes, there could be a separate conversations and considerations when it comes to cost. But generally, having multiple properties, meaning you probably would be accumulating a much more of losses from the property, and potentially be selling the first one that could be completely free of tax when you take into account of those losses that you have accumulated for the years.
Yeah, got it. Stephen, we had a question come in. Do we need to change existing property mortgages from P&I to interest only if we're moving to the US? Are there advantages, like for strategies of people that might be watching who are in Australia at the moment? Are there sort of considerations that they need to make if they might want to expand to investing in the future or things? What kind of things should they be considering?
Yes, so it's a good question. There are pros and cons when it comes to choosing your repayment type as principal and interest or interest only. Maybe just to give you some context. So in the past, say 6-7 years ago, interest only repayment was a very popular strategy amongst investors because it lowers the monthly repayments or cash outflow, and banks would actually take the face value of your monthly repayment outflow, which means that your existing liability commitment will be considered to be lower than principal and interest when it comes to borrowing. But today, in this environment, and it's now the new norm that banks and lenders, regardless whether you're paying interest only or principal and interest, they would actually use their own assessment rates and then add a buffer to your existing mortgage repayment, which in short, it negatively sort of impacts your borrowing power. So for future borrowing, it doesn't necessarily help keeping your loan repayment as an interest only. However, the other consideration is that in the current interest rate environment where the rates are at peak, and hopefully we get to see the interest rates dropping soon, the difference between the interest rates on principal and interest only, it's actually quite marginal, and so interest only interest rates are typically higher than the principal interest rate by 0.2 and up to 0.4%. So if you actually do math on an average, say $600,000 mortgage, the difference between principal and interest monthly repayment and the interest only monthly repayment, it's only like $200 a month. So choosing the interest only repayment, you'd end up not paying down the principal with a slightly less monthly sort of cash outflow. But of course, it's a borrower's decision and the property owner's decision, but there's not much difference.
Yep, got it. And one other question we had, Stephen, just while I've got you, around, and I know this is not what Odin does, but it's worth talking about. Someone asked, can we get a mortgage from the US to purchase in Australia? What's the advantage of taking a mortgage in Australia? Like, is it so it's local once you move back? Is that sort of the real advantage, or are there other advantages to investing in and using finances from Australia?
So just to clarify the question, so the question is whether it's prudent to get a mortgage from a US lender.
Comparing a US lender, yes, compared to an Australian lender and buying in Australia, comparing that to getting from a US lender and buying in Australia.
Yeah, so it's a good question, and there are pros and cons. So in general, getting a mortgage from a US bank to purchase a property in Australia, I understand the rates and pricing will be a bit more competitive than the Australian lenders, and also the credit score system and the US sort of regulation will definitely apply. So a lot of expats who have been in the States for a certain period of time will be quite familiar with the banking system over there. But one thing that you need to consider is that a lot of the international banks are quite picky when it comes to the property type and the location of the properties. So in general, we do observe that international banks limit their lending to Australian properties that are located in the capital cities.
Got it.
Or within 5 to 10 kilometers. And the borrowing maximum amount of the loan is somewhat limited to 60 to 70% of the property value. So that means that you're likely to get a better interest rate over lower loan amount, lower quantum, and then also potential restrictions to the location. Whereas the Australian lenders, the interest rates might be slightly higher, but in general, that you're likely to get a finance as long as the property is located on Australian soil. And also, the major difference is that most Australian lenders do offer an offset feature to the variable rate. That means that if your mortgage is $500,000 and you've got $100,000 sitting in the offset account, you won't actually pay the home loan interest for the balance that's sitting in the offset account.
Yeah, it blows my mind that that's not a thing in the US, and I know a lot of people have reached out. When I was having a look, I didn't realize that was is that an exclusively Australian thing, or it's just exclusively not a US thing? Is that, do you know?
I'm not sure about whether it's an exclusive thing to Australia, but it's very common in Australia.
And it's hugely advantageous if you've got the cash.
Yeah, exactly. And then not many international banks, not only in the States, but also in the Asian market actually offer that facilities. Which means that people paying high interest and not leveraging on the savings that they may have.
Yeah, got it. All right, Sky. I want to talk about particular places, because I think there's a lot of people that really want to talk about sort of the nuts and bolts. We've talked about conceptually how much and finances and setting up, but what about how's the market? I know I gave you that buzzword at the very top, but this is a good chance to segue to that.
Yeah, sure. I might just share a
please.
slide now as well. But yeah, as I spoke about earlier, there are a lot of different markets at the moment. Let's see.
Beauty.
Yeah. So sorry if you can't see those numbers, but for us, like a lot of the states across Australia right now are really performing in different ways. So the main ones If you're looking at the best performing, so from a capital growth perspective, it's Perth, Adelaide, and Brisbane by some way. Perth in particular has done almost 25% growth over the last 12 months, which is why we've been buying there for a few years now. We've actually stopped buying there for our clients. So just because they don't, the potential value going forward is no longer there, but there's some really good growth that has occurred. The most interesting one though for us is Melbourne. So we've done these webinars for a couple of years now, Josh. I would have said in some previous ones, Melbourne is not really the place to be buying right now. However, that's starting to change. So if you've followed any of the media coverage, it's all doom and gloom still about the Australian, the property market in Melbourne. Some specific government policy that was brought in, increased land tax, very pro-tenant in terms of legislation, has seen a lot of investors get out of the market. So lots of new stock coming to the market, downward pressure on prices. But at the same time, because of this shortage of property and because investors are getting out of the market, rents have continued to improve from, I guess, an increased perspective. So rents have been rising, prices have been falling. And for the first time in Melbourne, we're actually seeing some rental yields around that kind of 4 to 5%, which is basically unheard of for Melbourne in the past. The other thing to consider with Melbourne now is it's actually the third cheapest market in Australia. So property prices in Perth, Adelaide, and Brisbane, the medians are now actually higher than Melbourne, which again is quite unique. So at the moment, we're seeing a really good buying window. Prices are flattening. They're still falling a little bit in Melbourne, but you can negotiate quite heavily on properties as opposed to, say, Perth, Brisbane, and Adelaide, where it's multiple offer. There's 10, 20 offers on a single property. So if your time horizon's 5 to 10 years, or even that 3 to 5 year window, Melbourne represents a really good market at the moment because you're buying in and you're going to maximize that capital growth because you're getting into the market early. Places like Adelaide, Perth, and Brisbane, they're actually still going to continue to grow. So we're not saying no, they're bad markets. It's more that opportunity cost now that you're buying in to markets that have already risen 60, 70% over the last few years. So we try and avoid that. We try and get into these markets at the start of their capital growth cycle.
Love it.
The other thing I was just going to comment on is
Please.
so we have to come to us and say, look, hey, I just want the best investment property. I don't care where it is in Australia. I just want the best capital growth with a good rental yield. We strongly consider to our expat clients to consider regional. So we're talking about places like Townsville, Mackay, Bundaberg, some of the best performing property markets in Australia right now. Yes, they're kind of a bit kind of scary for people that have only ever maybe considered Melbourne or Sydney. However, there's just no data that says that capital cities grow better than regional markets. It just doesn't correlate in the data. So for us, it's looking at longer term, but also if you're looking for that short-term growth, you really have to consider regional markets as well. And as you can see here, the final point I had just on interest rate cuts. So we obviously get a lot of volume of inquiries. So we can already tell that people are sitting on the sidelines waiting for those interest rate cuts to start. So again, what we're looking to do is get into that market before those interest rate cuts do occur, because we know there's a lot of demand just waiting on the sidelines. And when it does start to happen, you're going to see an increase of investment activity, but also people looking to upsize their homes as well. So it's really kind of calm before the storm situation that we're seeing at the moment.
Makes it more fun, right? To compete with everyone that sees the same thing. So yeah, how early, if someone's watching this and they're thinking, you know, I will one day move home. I don't really know when, I don't know where. Is there an advantage to starting the conversation? And I'll direct this at you, Sky, to start, but I'm sure Pow and Stephen, you can jump in as well. But Sky, how early is kind of at least, and then what's ideal for a sort of the process of starting down this path?
Yeah, so for us, we'd like to be involved like phase one. So basically those initial conversations, and we've been speaking to clients for 6 months before they've decided to purchase. And for us, that's again determining the market, but it's also making sure they've got a team of experts around them. So obviously it includes tax and legal, but it may be that if you're looking, particularly setting yourself up for retirement, that you may be better off buying under a different structure, whether that's a company or a trust structure, all that kind of stuff. So up front, we'd like to get that clear because you don't want to go down and get pre-approval and say your personal name, and then maybe you're buying a commercial property, for example, and you might not have a different structure set up. So we like to have those conversations early. From there, then it's we have a pretty good understanding of what you're looking to do and how we're going to do it. So that's when we'd like to bring everyone else in as well.
Okay, Stephen, same question to you. What's an ideal amount of time if somebody's starting to think down these paths?
Yeah, thanks, Josh. So very similar to what Sky just outlined. So I think it's best to talk to the experts like as soon as possible, like even 6 months prior to making a decision to purchase. And the reason being is, so we're in an environment where interest rates are high, and banks and lenders have made policy changes, probably the most number of times over the last 12 months compared to the previous years. So it's very important to know your eligibility criteria and product offerings. So talk to us to know your borrowing options, and that profile could actually change 3 months later. So I think having that conversation starting early, and then keep yourself engaged to the latest market information, so that you can avoid any surprises down the track.
Yeah, love it. And Pal, I know for me, one of the difficulties early on was this idea that the tax years in Australia and the US are not aligned. How does that work for you in terms of timelines? And I want to ask some other tax questions as well, but in terms of timelines and how long before people need to start planning, whether it's, let's start with buying. So if they're thinking about buying, how long should people be sort of really structuring things before they start down the process with Sky and Stephen?
Yeah. So tax is a bit easier, straightforward. And once you realize the structure they want to go along with, it wouldn't take too long to consider so much more about the properties first. But in some scenarios, there could be, if you're thinking of using a different structure, instead of buying under your personal names, like a trust, for example, that may then take you a few months to start the setup process to get a trust set up. Then look into the structure if that is possible for a mortgage. But still, we will start the conversation when you are thinking of buying, so tax and mortgage and the properties. What is the best structure you might want to look into? Because again, when it comes to mortgage, even though from a tax perspective, trust may be a better options, or any other structure may be a better options. But when we come back to the mortgage options, it's still, you need to consider what the bank is thinking. So the bank may not like the way that you're thinking that you want to set up, especially for expats living overseas. So there are a lot of constraints and requirements that you just need to go through at the planning stage. So to make sure you are definitely able to get a mortgage, and this is a structure that the bank can accept, and you can still at the same time achieve some sort of tax savings. So we usually start the conversation again, like Stephen said, maybe 3 to 6 months before you're actually thinking.
And is there a particular time of the year? I know that's one question we get asked every single time we do a webinar around tax structuring. Is there a time of the year that works better or worse, or is it really just about planning and knowing what's coming?
Yeah, from a tax perspective, the timing of buying in a financial year doesn't really matter. It's really at the end is, when did you settle your property? When did you start to collect rents? And only from that point onwards, you will need to report that income in Australia. But like I said, likely if you're having a mortgage, likely you'll be in a loss position. So you probably not need to expect any tax payable. It's more a matter of what sort of expenses or losses they can accumulate from the properties.
Yeah, got it. Stephen, I know the question I'm sure you get asked is, the crystal ball, interest rates, what's happening, should I buy now? Is the conversation directed mostly by like people saying, I want to move within 2 years? Or do you get people saying like, hey, I'm willing to sort of roll with the market, and like, what do you think? Is it, I realize, you don't have a crystal ball and there's nowhere to say, but how do you weigh those two things up?
Yeah,
it's impossible, Josh. Thanks for asking.
to be upfront, I do not have the crystal ball, but I can definitely help you to manage your expectations, reflecting the current sort of circumstances. So we actually do get a mix of sort of client groups where those people who are looking to take a motion to Sky's point, that those people who are on the sideline, they're ready to go, versus those people who want to sort of watch the market and just ride on through the cycle. I guess now is really a critical time where the interest rates in Australia have been high. It remained high, but there's this sentiment that it's stabilized over the last 6 months. And what we notice in the mortgage industry is that you may have seen in the news article that Australian banks and lenders across major and non-majors, they've actually started making changes to their interest rates, mainly dropping the interest rates out of cycle, which indicates that the market's heating up. And also amongst the expat communities that we're serving, that we're now seeing more clients coming to us with a contract of sale or have the property that they've decided to make an offer in their mind, which is a very different dynamic compared to 6 months ago. So that means that the banks are like getting ready to lower their margin and a bit more flexible so that they can compete in the market and better serve the borrowers or future borrowers. And then also the property market itself, it's heating up where those people who've been on the sideline, we're actually observing a lot of people actually taking motion to compete and winning. So that's my long-winded way of describing the crystal ball, where good news is that now it's no longer a question of if, now it's a question of when the banks would actually start dropping the interest rates. And I don't think it's a future anymore, that it's present as we have been observing the changes over the last couple of weeks.
Yeah. Sky, do you have from your sort of clientele people sitting there sort of waiting, like with bated breath, sort of they've set up everything, they're ready to go? Do you have a lot of people that have sort of structured that whole thing and then they're ready to launch when something happens?
So they're kind of so if they are our clients, they're actually buying right now because they know this is the kind of time. So they're not sitting and waiting. We have that discussion and we run through the data and explain, hey, this is the buying window. Our actual favorite for the buyers coming up, it's actually December because people still need to sell property, but a lot of people don't buy property because they said, look, I'll just wait till January. Let's go on a holiday. This includes the selling agents. Go on a holiday and we can revisit this in January. Get some of our best deals in December because of that kind of that process, particularly for people that have to sell for whatever reason. Maybe they bought another property. They kind of just take the best offer they can get. So that's what we're looking forward to. December is one of our busiest years. But for us, it's not really. I guess most people are looking to buy now if they're ready and comfortable. But we do see a lot of expats who, over the last few years, have a lot of money just sitting in a US bank account. They know they want to invest in property, or they know what they want to diversify outside the US, and it's really just taking that action. For some people, that can take 2 weeks. For others, that's a 1 to 2 year decision to make that process happen.
Yeah, and I think we've sort of, this has been an underlying message for the whole thing, is that it really is individual. It's not, there is no best case scenario for any three of you. It is down to tailoring a solution to the individual, hence why we've got professionals like yourselves. Pal, do you see particular mistakes? Do you see people sort of fall into traps regularly when it comes to these sort of things? What are the kind of mistakes and traps that people fall into?
Yeah, the most common mistakes I've seen is, again, not fully understanding being a non-resident for tax purpose, being an expat living overseas. What does it mean back at home from a tax perspective? So a lot of people, and I believe more than half in general, that they kind of forget they need to still tell the ATO about their stories. So they might be left for a few years, but still having a few outstanding returns that they haven't attended to because they were thinking, oh, I have left Australia and have no income in Australia, so it seems like I don't need to do anything. That is kind of a wrong thinking. So still, you want to keep the ATO updated about for a few benefits. One, updating them that you've been non-resident for tax purpose, so your US income has no connection with Australia. You don't need to pay tax in Australia for that income from the US. Secondly, is to avoid the penalties, because if you're not telling the ATO about your story, they wouldn't know what exactly happened to you, and they might still think you need to lodge return, and that could be a penalty every year, which is up to 1,500 if you haven't lodged in time. And then third one is, again, if you're having properties, for example, some people in the wrong mindset, they think, oh no, I'm making a loss on the property. I don't really have a fiscal income coming from the properties I already have in Australia, but they haven't lodged return. So it's wrong in the way that, yes, you're right, you don't have any income coming through from the property because of the negative gearing. However, you might also miss the benefits of those losses you could have accumulated, and those can help you to offsetting any income in the future. So I think it's important that even though you are still looking at buying, but at the same time to look back on your history with the tax office to make sure your file is up to date, and then plan for your purchase. Make sure everything's in line so you can sit again once you sell, you can sit on the sideline and let people help you to figure out what is the best plan.
Yeah, I think it's a really good point because I hear a lot of people sort of saying like, it'll be okay, but like you're potentially missing out on things or you're violating like laws, and it is important to not pretend like you can just sort of fudge your way through it. They're going to work it out in the long run, so be upfront, get it clear. Sky, from your perspective, any major mistakes that people should watch out for? Any traps?
The one we see a lot of expats fall into, like it's obviously not our clients, but people that go at themselves. You got to remember that the selling agents don't work for you, but some of the best selling agents in Australia in terms of real estate make you feel like they work for you. So you be calling up a agent saying, "Hey, we really want to buy this property in Brisbane." And they say, "Oh, this one might not work, but we do have this other property coming up." And what we see time and time again is people overpaying for property, working with maybe one agent who actually works for the seller. They don't work for you. So they might make the process easy for you. That's probably because you're overpaying for a property, and it's a really good sale for that selling agent. So that would be one that we probably flag up front.
I love it. Stephen, have you got a particular mistake or misstep that people take when they're planning their mortgage structure?
Yeah, so the two common mistakes or top mistakes that just came into my mind. So one is that there are a lot of motivated buyers with excitement that they make a purchase without talking to experts or even getting their loan pre-approved. So which could cause a lot of troubles, and we're here to help you. But I'll suggest to if you have a plan to buy a place, yeah, please, even just understand your borrowing power, or in a perfect world, get a pre-approval arranged so that you have the certainty or confidence in the finance side, and you can get the smooth settlement process. And the second mistake is it's more of a being I guess less proactive. So we actually observe a lot of not only expats but also overseas investors who have an existing property and have their mortgage, but haven't had their interest rates reviewed for a certain period of time.
Yeah.
And as I flagged, that we're actually seeing a lot of banks and lenders making changes to their product offerings and pricing, and that now it's a very good timely opportunity for you to review how much you could potentially save and how you could potentially optimize your current mortgage and the property structure. And if you drag it because you're busy with other things, it's pretty much that you're missing out the opportunity to save hundreds and thousands of dollars where other people are enjoying their savings. So
Yeah.
review your home loan.
Between the three of you, you're going to save some money. Awesome. Sky Hammer from Convergence Buyers Agents, Stephen Lee from Odin Mortgage, and Palam from Odin Tax. I want to thank you all very much. We are going to put out some information and share that to everyone who's watching. I want to thank everyone who's watching as well. We do send some feedback and we send some forms that allow you to connect with our three panelists today, ask them follow-up questions, engage them individually. As I said at the outset, it is most important that if you want to start down this path, you get onto it early and you actually reach out to them and tell them your personal story, because it's going to make a huge difference. No matter how many webinars you watch, it comes down to an actual conversation. So thank you three for chatting with me tonight, and I hope everybody learned something. And yeah, be sure to check your emails.